Howdy, welcome back to Dion Talk. Recently, I did a video on one rental at a time with Michael Zuber and Matt the Lumberjack Landlord, part of the Three Amigos. And we talked about Ivy Zellman being on BiggerPockets and the woe and foreboding that she was predicting. And a lot of us thought, why didn't they just clearly ask her the question? What should an investor do now with your predictions? They kind of came around to it, and she said investors should buy properties and home buyers should not. But I'm actually curious. Two investors that I know that have been investing over 20 years and are doing it successfully and have seen crashes and survived them. In 2022, with what's going on with 40-year mortgages coming out, demand being super high, supply being super low, what should an investor, what should you, that person that's trying to make work optional in 10 years or less, do? So let's start with Mike. You're a new investor, you have one or two rentals, you're kind of in that first few years. It's right now, interest rates are doing what they are. What do you do?
Well, the good news is my story doesn't change. I invested in an environment like we have today. Not quite the low inventory, but demand was just as crazy. And all you can do is you can focus on the next deal. Too many of us get wrapped around social media about needing 10 or 100 or 1,000. And we want to rush the process. Real estate investing is not something you can rush. It is always about the next deal. The next deal will come faster once you get to year 4 or year 5. The first 4 or 5 years suck. It's very slow. And it's just about the next deal. If you have 0, it's very simple. Get a buy box, save your money, understand your spending, all of that. I assume that's been covered already, but you get a buy box, you learn the market, you learn average, you network. You need to be growing your network. The thing that you should be doing today, because there's no inventory, is, I talk about in my goals, that little black sign behind me, about adding 2 new people a week. What I would be doing today, given the low supplies, I'd be trying to add 4, 6, 8 new people a week, because the only deals that you really are going to get are off-market deals. So get your buy box, seriously, go to Vistaprint, name, phone number, and on the back of the card, write your buy box. Everybody you speak to needs to know your buy box. You will be shocked in 4 or 5, 6 months. People will call you and go, hey, you still buying 3-bedroom, 2-bath in this part of town? My sister might want to sell. My mom might want to sell. I found a deal. I'm an agent. I just took a listing. You want it? Let me double end it. It is the time to blow up your network. Also, only 30-year money. No adjustable rate mortgages. I don't care what mortgage brokers say. Don't do it. Not approved. One rental at a time does not approve. And really validate rents. Get your numbers going. It is going to be an awesome year to be an investor because you are going to start to find motivated sellers. The first quarter, tough, but good news. You're a new investor. You don't care. You're going to invest for 20 years. Now is the time to learn the market. Double, triple, quadruple growing your network. And please don't forget, tell everybody your buy box. I think it's a great time to be an investor. You got to appreciate fear of missing out from owner occupants. So don't get caught. Don't do a bad deal. Never buy or create an alligator. But I am very excited about 2022 as a new investor, because if you can do a deal now, it's the hardest market in 21 years. Every market after this will be easy by comparison. So I want to congratulate you for getting started, taking action, doing the work daily. Just go after it. It's a great time.
It's always a good day to buy a great deal. And they're out there.
They're there.
Okay. And Matt, in the frozen wastelands that you live in right now,
I know
has it gone above 30 in the last 2 weeks?
Today was 60.
Nice. Okay.
Out of nowhere. It was like, what just happened?
And you're inside. Sure. What are you doing?
Yeah, exactly. Well, and that's the thing is it was outside. Yeah, it was very nice. Aside from Mike taking every angle of the answer, literally every angle of the answer, I think the core thing is just fundamentals, right? The blocking and tackling. We have to stay focused on the fundamentals. It's just that simple. We can't be making excuses or reasons why or justification Jenny or justification Jerry. We can't be making things up of why we think this might be the right, might be good, could be better. Well, it's not as good, but all that needs to go by the wayside. It really, truly, when it comes down to one thing, and that is the fundamentals. So if you stick to the fundamentals, you will do a good or great deal that's above average. And that's the only thing you're going for. People can overcomplicate it, might give you all the detail that you need, but the one thing that you need to wake up to every single morning is, I need to focus on the fundamentals. And then all the detail that Mike gave is exactly right, but it's focusing on the fundamentals.
Someday, I'm going to stop buying rental properties.
But not today.
I've actually got a bit of a pivot. I think as an investor, we should be looking for those great deals. It's always a good day to buy a great deal. As the demand surges, as people hear interest rates are going up and that FOMO kicks in and people start doing stupid things, don't do stupid things. Don't buy an alligator. Do the work, learn your market, study your market. We have two options. When you're first starting out, we're saving every month. We're continuing to work on the credit score. We're opening up more options. Every time you save, you increase your down payment size, reserves, cash for immediate repairs, and closing costs. Every dollar that you add to that account opens up more options as you continue to look. For an investor that has a few deals, at some point, when you can't find a deal, and this is where my real pivot's coming in, sometimes, and I should make a video on this, it makes sense to pay off a mortgage instead of investing. It isn't when we're starting out, when we're in growth mode, but there comes a point where you have the cash flow to support your life or multiples of it. And you look at paying down a mortgage. And most of us do the math like this. I have an interest at 4.8% interest. If I pay the mortgage off, I'm saving 4.8%. But if you're investing like I do, and you invest buy and hold without the plan of ever selling or tapping equity, no cash out refinance, no home equity line of credit, you're not really counting the principal pay down, you're not accounting the appreciation, you're recycling the cash flow. That's been my strategy. When you pay off a mortgage, you add the interest and the principal pay down to your cash flow to cycle it faster. So each situation is different. Figure out what makes sense to you. But you're still every day studying your market and learning things like, as an investor, we're looking for a deal. So we're thinking that the seller is an investor looking to offload a deal, and that's a mistake. As an investor, we think, I'm going to list on the MLS. I'm going to get as many eyes on my property as possible, maybe use other platforms like Zillow, Redfin, whatever your cup of tea is. And you're going to have your agent get in a bunch of offers and give you a date to look at them. And you're going to look and see how many offers come in. A lot of sellers inherited the property or are at an age where they're trying to get out of the industry. And the last time they purchased a property, the internet wasn't a thing. The MLS was paper that was faxed from office to office. And they can't believe the astronomical number that their agent is telling them they're going to get for their property. So know your market, know your area rents, know it well enough to make an offer quickly. Speed is your friend. Especially when there's more demand, getting in before the people that need to go and have a tour or want to do their due diligence or go check for permits. Your time to decide if you want a property, the way I invest, is during the inspection period. Our earnest money is protected and we can back out during an inspection period. So I actually also do a larger earnest money to get the attention of the seller, because as an investor, we know that's really not our money. But some sellers see a large earnest money, $10,000 or $15,000, and they think, if this person backs out, I get to keep that. It's like free money. So that's what I would be doing. Do the work every day, know your buy box, understand what a good deal looks like so you can recognize a great deal and make that offer quickly. But look at your situation. Someday it's going to make sense to pay down a mortgage. What are your thoughts on that, Mike?
Oh, I totally agree. I did that on purpose, right? For 15 years, I was in growth mode. I got to the point where I was a year away or thought I would be a year away from being done. I moved capital around. Again, I get to recycle capital, where I ended up with several free and clear assets on purpose, right? I called it the blank pile, because I lived through the last crash and I saw people lose properties and saw some people lose lots of properties. So I purposely created a pile that no one could touch, right? Technically, there's still property taxes, but I would, rent would cover that pretty easily. So yeah, I did that on purpose, and I totally agree. I'm not in the Dave Ramsey camp. If you buy one and then you spend the next 10 years paying it off, you will have missed all of that appreciation. You are either in growth mode or you are in stabilized mode. If you're in stabilized mode, I have no problem with taking some of your capital and paying off properties. I have no problem with that.
I was actually expecting to be pounced on for that one because I last week said I would like a 1,000-year mortgage. I don't ever want to pay off a mortgage. I'm going on the cash flow. But if I can increase the cash flow in a time when I'm not finding the great deals. Mm-hmm. Matt, what are your thoughts?
For me, I think, like I said, I think it depends on what the debt structures around the deal. Like, so for some of my commercial stuff and like that next, 4 years, when any of those rates going to, reset, I'm actually focused on that debt. My 30-year fixed debt, I don't care about because it's 30-year fixed rate debt. I'm probably not going to, the likelihood that I'll find an investor loan that's less than 4% 30-year fixed rate debt is probably zero. So I'm not going to focus on that debt at all. I'll keep my fingers crossed and maybe it goes to 3 or 3.5, and then I'll refinance the entire portfolio. However, the likelihood of that happening being slim and none, I'll focus on the commercial stuff that I have, paying those mortgages down to make sure that we stay in good tolerances with all the craziness that goes with commercial, debt service ratios and all that good stuff. So yeah, I don't disagree. I think that it's always highest and best use of capital. And that's tough to do when you don't know what the next 2 years of the market looks like. And so, Mike and I have both cleared the decks. We brought a lot of capital on board, reworking through the entire portfolio to be ready in case anything like that happens. But as far as the cash flow goes, the cash flow could probably be used towards paying down some of that commercial paper.
Right. I like that you have to look at your situation.
Very much.
The beautiful thing about real estate is there is no one right way to do it, but there is a one right way for you. And that way might change based on your position from 5 years to the next 5 years. Mm-hmm. So if anybody has questions and they want to reach out, Mike, how can they get a hold of you?
Go to your Google search bar and type in One Rental at a Time. You should see a website, books, YouTube channel, Instagram. And I do a live stream Saturday mornings at 8 a.m. Pacific. I
try to be there for each one of those. I still have questions. And it's easier actually to ask that question in the live stream than to shoot you a text because it's an answer. I know someone else is probably thinking the same thing.
Yep, exactly.
How can they get a hold of you, Matt?
Lumberjack Landlord on YouTube and on Instagram, Lumberjack Landlord, daily self-management tips and fun things that you get to see when you self-manage.
Awesome. Thank you both. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.